The conclusion that I've drawn is that you are dangerous.
Alright, but today is the 18th of May, being a Monday, and in relation to the economic calendar, today we had no high impact news, so just going to be taking a look at the trade that I took during the AM session, doing a small little breakdown and analysis for this trade. So I did have a bit of commentary before even executing the trade, so just briefly take a look at that. So I sent in at 9:46. Price action delivering into this discount BISI right here, and this BISI was located around the OTE of this given range. So from this candle's low all the way up to this candle's high, you have your equilibrium coming in somewhere here, and then OTE was residing right here. So that's what I was paying attention to. We had 9:30 deliver us down towards this BISI, and then the next piece of commentary I put in was the previous settlement was filled, and then price action was located in the -4, -4.5 standard deviation level, projected from a point of inception at buy sides. So you have your previous settlement coming in right here, and we see that 9:30 opens here, and we have that deliverance down towards sell side, filling our opening range gap. And we also have a point of inception that was established here ahead of our 9:30 opening. So point of inception, and then we have a clean change in stain delivery. So series of up close candles, series of down close candles, and then we anchor a standard deviation projecting towards sell side, and it was projecting for terminus to be right here. And where we find terminus, we're going to find inception, which is where we ended up taking this trade to retrace back into the range. So in relation to the execution and what was utilized for it, during the New York AM session, we utilized that M15 BISI, as well as the fact that it was in alignment with the OTE of that M15 range. The new week opening gap was also utilized. We had the M1 standard deviation projecting towards sell side for us to locate that point of inception for buy side delivery. Entry mechanic was a 15-second inversion for a value gap, and then I was using a M1 and a 5-second standard deviation projecting for buy side, and then exits 15-second TLP and 5-second standard deviation -2.5, which was in alignment with that 15-second TLP. So taking a look at the M15, this is what it looked like. So from this candle's low all the way up to this candle's high, we have our equilibrium coming in right here, and then we have our OTE that presents itself right here. We end up seeing price action delivering down into this discount imbalance. And then we can take a notice to the fact of how the bodies are being respective of the given OTE of this range right here. And then we have our new week opening gap, which price action was delivering down into. So we have the Sunday 1800 opening being right here, and then we have that Friday closing of the day coming in right here. So our new week opening gap projected out in time. We see price action also located inside of it, and previous settlement in relation to regular trading hours was also in alignment with our new week opening gap. And honestly, from naked eye, you could even say that our previous settlement is in alignment with the consequent encroachment of our new week opening gap, but it's not really that important. We had the Kraken correlation. So with this low, when we deliver into this M15 BISI, Kraken correlation is established. So FVG, Kraken correlation, ES fails to follow suit. I'm pretty sure YM also failed to follow suit as well. That M15 BISI Kraken correlation was presented. And then we drop straight down into the M1. So we have that 9:30 opening coming in here. 9:30 opens, we deliver straight down towards sell side, engaging with the new week opening gap, filling our opening range gap, as well as engaging with this M15 BISI, which is in alignment with our OTE. So we have that Kraken correlation with the M15 BISI, and then a second stage Kraken correlation was offered right here. But if we're paying attention to this price action, like I mentioned previously, point of inception was established here, Kraken correlation, change in stain delivery, and then standard deviation projecting down towards sell side. We end up taking a notice of the fact that as we engage with our change in stain delivery, we form a TLP right here. So TLP was presented here, no Kraken correlation with any of the correlated assets. So all the correlated assets created this TLP right here. And then we have that deliverance down towards sell side 9:30, injecting that volatility for us to spool down towards this M15 BISI. In relation to the M1 standard deviation, it would have been anchored from this candle's low all the way up to this candle's high, projecting for buy side, and this standard deviation was never achieved. Only the 5-second standard deviation was exhausted at the minus 2.5 level, but this M1 standard deviation wasn't achieved. But going on a little tangent here, Nasdaq is the weaker asset. Nasdaq has delivered down towards sell side, engaging with this M15 BISI, which ES had not done. ES has actually engaged with this high. I wanted shorts going into today, but 9:30 delivers us down towards sell side, and this was more than plausible for us to look for that buy side delivery motion back into this range. But from this buy side delivery motion, ES ends up engaging with this high because ES was the stronger asset. It failed to engage with this low. Nasdaq did engage with this low, meaning Nasdaq fails to come and engage with these highs. But straying back towards the trade, that M1 standard deviation anchored from this candle's low all the way up to this high. And as I was observing this price action, what I required was a clean change in staying delivery on the M1, and we didn't really have that, to be quite honest. We have this down close candle, and we don't close above the opening of this down close candle in a very meaningful manner, which is something that led me to managing the trade the way I did. Of course, I could have looked to say I'm going to look to hold for this drawn liquidity that presents itself right here, but naked eye from this candle's high all the way up to this candle's low, where I exited would be at a premium of that given range. But going into the day, I was already anticipating not the best of conditions, and this was proven to me the moment 9:30 opens and we failed to print our first presented fair value gap until this candle right here. So 9:30 opens right here and we deliver towards sell side in a rather high resistance manner. We're not forming imbalances during this deliverance down towards sell side, and this is simply just a further confluence to me acknowledging the fact that this may deliver rather poorly. But M15 imbalance engaged with, new week opening gap engaged with, previous settlement closing engaged with. We can take a notice to the fact of how price action is being very respective of, for one, the M15 BISI. We're not seeing any body candle closure inside of it. For two, as well as the previous settlement closing, we're not seeing any body candle closure under it, and the consequent encroachment of our new week opening gap. And then dropping down and taking a look at the 15 seconds, so we have that 9:30 spool down towards sell side, that TLP that presented itself on the M1 at the change in staying delivery. And with the sell side delivery motion, what I taken a notice to is, for one, we've already acknowledged this is very high resistance deliverance down towards sell side. We're not printing imbalances like we were on the left side of the chart, and we know that where high resistance prints, low resistance will print, and where low resistance prints, high resistance will print. So we have that low resistance run up towards buy side, inviting for a high resistance run down towards sell side. But during this high resistance run down towards sell side, very clean, clear TLP presented on the 15 second right here, and we have that deliverance into that M15 BISI. Second stage cracking correlation offered itself right here, and then we have that deliverance up towards buy side, the inversion of this 15 second fair value gap, which is what I entered off of, and then you'd be looking to see a 15 second change in staying delivery, which does end up occurring. So we do, I don't know why this is blurry, which is kind of annoying, but we have this down close candle, deeming this an indecisive candle. So we're not counting it in the sequence in relation to the series of down close candles and the series of up close candles. So we do have that change in staying delivery, could look to anchor a body standard deviation, and naked eye body standard deviation is quite literally going to project for where price action ended up rolling over at. But I didn't have that on the chart, wasn't paying attention to it. Executed off of the 15 second inversion fair value gap, we have that 15 second change in staying delivery. We return back down into the order block, and then we have that buy side delivery motion that follows right after. And then taking a look at the 5 second deliverance down into all of our PD arrays that reside right here, new week opening gap, M15 BISI, previous settlement closing, second stage cracking correlation offered, as well as the fact that all of this is going on within our 30-minute time window, so that 9:45 mark all the way through our 10:15 mark, all of this price action is occurring right here. And 5-second time frame I wasn't really paying attention to. The only thing that I grabbed from it was a standard deviation. So from this candle's low all the way up to this candle's high, projecting that out in price for that buy side delivery, and we end up taking notice of the fact that that minus 2.5 in alignment with our TLP that resides right here. So yeah, that is pretty much it for the trade in relation to the analysis. The only commentary that I had, other than the ones before the trade and during the trade was after the trade. So simply just, displaying what was utilized for that execution. Clean entry, clean exit for a poor day within the scope. So I had already anticipated for today to deliver in a rather poor manner due to the due so I had already anticipated for today to deliver in a rather poor manner. For one, it's no news Monday, as well as the fact that the sessions prior were not delivering in the cleanest manner. So when I was doing my pre-session outlook, there wasn't a lot that I could confidently say, okay, I'm going to look to do X, Y, and Z. I had to wait for more data to print after that 9:30 opening, but I was on the side of sell side deliveries. I wanted that sell side delivery, which may get offered now because a cracking correlation was offered with that pre 9:30 high with ES. So if we just jump in and take a look at the chart, we have that point of inception established here for reaccumulation of orders to continue that sell side delivery motion. But as Nasdaq is delivering up towards buy side, ES has already engaged with that pre 9:30 high. So cracking correlation was established there, and that invites that sell side delivery motion to then engage with that London low. Could ultimately look to see even Asia low being engaged with, but ES has not engaged with the London low. This is what I was saying in terms of today may be rather problematic in a sense. If we're paying attention to the top three charts, YM on the left, Nasdaq in the middle, ES on the right, very poor deliverance. We have the 1800 opening right here, deliverance down towards sell side, deliverance up towards buy side, very high resistance. And then we begin delivering down towards sell side. Cracking correlation invited again at the London low. If the framework is offered, this may invite for buy side delivery motion, entailing that price action is going to return back up into this range. But yeah, that is quite literally it for the execution.